All right. We're live now. Welcome back, everyone, to another live stream. This is the last live stream for the year, 20th of December today. Just wait for a little bit more viewers to turn up. All right, we're live. Just let me know if you are tuning in. Just say something on the chat. Otherwise, we'll just wait till it gets a little busier. I suspect that people might be away already on holidays, so yeah, we'll see what happens there. But yeah, today I have this huge muffin. I don't know if you can see this. Absolutely massive muffin. So like, compare. Okay, it doesn't look that big, but it's actually huge, right? This muffin from Costco. This one was about just over $1 each. They were $13 for 12. So, pretty good flavor. It's like double choc muffin. I have a problem because I have to finish them by the 22nd of December. And I have 3 left, so I'm doing my bit for today. Hey David, how's it going? Good to see you here again. Yeah, Jeremy, absolutely massive. Tastes pretty good though. This will become a mukbang channel. But I also got cookies. Chocolate chip cookies. 24 cookies for $12. And they're not small ones either, they're like pretty big. Like Subway. A little bit smaller than Subway sized cookies. This is good. So anyway, in terms of market movements this month, it's been a very shocking month so far. The positions haven't done too good this year. So this year actually resulting in quite a big underperformance against the market. A lot of it was driven by Oceania Healthcare in terms of the public portfolio. retirement village stocks just absolutely hammered lately. So not a good year for stocks, but hopefully next year will be better. Even though next year we'll probably see a recession, right? That's what our finance minister, Grant Robertson, said. Sorry, it wasn't Grant Robertson. It was Reserve Bank Chairman Adrian Orr. That's what he said. But Grant's saying that we might not be in as bad of a recession as what it could be, because he's the one that's spending the money, technically. Looks like another leg down in the US markets. Yeah, it looks like it'll be quite a bad end of the year. There won't be any Santa rally. It looks like Christmas is cancelled. But yeah, how you guys, David and Jeremy? Sorted for Christmas? Got all your presents ready? Has inflation been impacting your spending? How's that going? Like, so far this year, there's been huge notable increases in like grocery shopping and stuff like that. It's good that petrol prices have come down, but I think overall, yeah, a lot of inflation around consumables. I'm like halfway through my muffin. It's absolutely massive. I'm already so full. I might save that one for later. Sorry to show you guys my food and eating in front of you. Let me just wash my hands. Yeah, not too much, pretty frugal. Yeah, that's good. Definitely pays off when we're in times of very high inflation and potential recession next year. But in terms of the market, what I was going to say is that this year was a really bad year. If you're investing for the first time, then, you know, in the past year or so, then you might have just come in the bear market. Yeah, how long have you been investing, David? Yeah, I think in my mind, like, this year was the worst year for me and for my performance as well. Personally, haven't done too well, underperformed severely. But like over the next year, I definitely do expect a recovery in the market, even though from an economic perspective, things might get worse more, you know, because interest rates will continue to go up. People will feel the pain. People will roll over their mortgages next year. Things are going to get tough. Inflation's going to... potentially inflation has already peaked. We might still see some inflation. Inflation definitely won't go down below 2% anytime soon, because to go to an average 2%, it has to drop below 2%, right? Because right now we're well above 2%. So it'll be a long time before inflation goes back down to 2%. Between the 1 to 3 is what the RBNZ targets. And so it's setting up to be quite bleak from an economic perspective, but we all know that markets tend to reprice quicker than economic reality, just like how the stock market has already dropped 33%, whereas the economy is on face level, like, still doing all right. So that's something to consider. Has the market already priced in all the impact of, you know, next year's recession? We don't know. I have a feeling that based on what I'm hearing in just around hearing what people are saying on the news, on the radio, on YouTube, a lot of people are saying that a recession is coming. And to me, if everyone thinks a recession is coming, then chances are it's already priced in. And people expect it to be quite a big one. So in my mind, it looks like it's been priced in. But at the end of the day, it could go on for quite a long time. This recession could last many, many years. So we don't know that yet. We'll see what happens. Luke, good to see you here. Food prices are a joke. Yeah, it's been crazy. Food prices not doing good for your wallet. The other day I was just at Pack and Save. I noted that chicken thigh without the bone inside went from $20 per kg to $22 or $23 per kg. Right, that's pretty crazy. Oh, actually no, it was $18 a kg before, like last year, and right now it's at about $22 per kg. So that's a pretty big increase, right? And then I went to Costco the other day. Chicken thigh without the bone inside was $15.50 per kg. So it's quite a big difference. But I also noted that when I went to Costco, when 3 weeks when it just opened, and I went last weekend, I noted that the prices are not as good as what it was before. There were a lot more rebates on my first visit 3 weeks after it opened, and perhaps that was just a marketing strategy to bring people in to give off that image that things are a lot cheaper. But then when you compare the prices to like what's at Pack and Save on sale, it's about the same, right? So I bought bulk like some pasta sauces. Like it's actually not much cheaper than what you could find at Pack and Save when they have a sale on, right? But if there isn't a sale on, then definitely Costco is cheaper, but it's not as cheap as it seemed. Adam, good to see you here, mate. Labour being voted out will be the catalyst New Zealand markets need to make a recovery. Yeah, hopefully that would cause a catalyst on the upside. But I feel like the market would also price in Labour being voted out based on the current pollings. Yeah, National Act looking like they will be coming in. So that's something to keep an eye on as well. David, since 2020, I'm more of a trader now, though with a longer term focus, being in cash for most of the year, fortunately. Oh, that's very good, being in cash most of the year. I think, yeah, that was the right play. See, in finance theory, there's like what they call the equity risk premium, which is like what you would get what you would get on a returns basis above the risk-free rate, right? Above what you'd get by putting your money in the bank. Technically, when you invest in stocks, there's that risk-free rate that you make. There's the equity risk premium that you're making. But it turns out this year that equity risk premium was hugely negative. So good on you for investing in cash. At the end of the day, finance theory is just that. It's just theory. Lots of numbers and formulas, but I guess it gives you a framework to think about things, but it's not that helpful in terms of making actual investment decisions. We got 12 viewers right now, so good to see things picking up. People are still at work. Have people? Let me know in the comments if you have finished work already, or you still have work till Friday. If you're working, if you're studying, yeah. When do you guys? If you're studying, when do you start your semester? Let me know. I would have loved to buy the transcript of Jacinda calling Seymour a prick. Hilarious that they both signed it. Yeah, I think it's going on Trade Me, right? They're doing something for donations, for some cancer thing. Let's see if it's on Trade Me. Jacinda prick. Comment. Was it Trader Dave? That was David Seymour's. That was David Seymour's username. Because I saw that. Oh, can't find it. Let's see where it is. Just give me a minute here while I find that. Jacinda prick trade me. So far it's hit 70,000. Oh yeah, I think I found it here. Whoa, it's at 100,000 right now. Let me just, yeah. Wow, $100,000. So doing really well. Wow, this is a big trade, eh? 3,000 trades. So this is good. I'm really, really. It's quite inspiring to see that happening. Adam, but if they increase funding for retirement villages enough, I would vote for them. So there's a lot of personal interest there. Hey, Adam, seeing what you could get out of it. The good thing that well, not necessarily good, but Labour did do like electric vehicles a service in the sense that, you know, they did that tax incentive thing, so that's encouraged a lot of people to uptake electric vehicles. So if you did want to buy like a Tesla, then definitely that would be good for you. But yeah, we'll see about that. We'll see what happens to like what Labour can give out, the lolly scramble towards the end of the year. Haplum Age finished work. This is our busiest time of the year. Pork roasts don't cut themselves up. Hey, till 7 figures, Choi Boy, how you doing? Thanks for the donation, man. This is like my first donation for the whole of my live stream. This is great. I don't actually know what happens. Do I get paid? $5. Thank you so much for your donation, man. Really appreciate it. Thursday is last day of work for the year. Finally have time to hop onto your live stream. Yeah, thanks, man. I understand you're really busy, but yeah. We'll definitely catch up soon. So for those of you that don't know, Till 7 Figures also has a YouTube channel. He does live streams as well, talking about personal finance and stock markets content. And yeah, I did ask Jack, Till 7 Figures, Choi Boy, aka. Yeah, I asked him about how to set up the live stream because I jumped on a few of his live streams as well and really enjoyed it. So thought I'd do that as well for myself. But yeah, thanks for the support, mate, and we'll definitely catch up soon. For those that don't know as well, we used to go to the same school here in Auckland, so small world. Bradley, I don't think much looks like we are heading for a bit of a recession. Yeah, I think that's the general consensus right now, that we will go into recession. Quite a deep, well, I guess whether it's deep or not, it's debatable. It depends on where unemployment rates go. If we go to like, I don't know, right now it's about 3%. Maybe it goes up to 3.5%, 4%. But I think it'll be quite tamed. Tusky, the tax incentive didn't work though. Auction houses in Japan immediately upped the prices by the exact amount of the tax incentive. I'm not sure if that's what happened. Well, yeah, there is some inefficiencies with like tax incentives, which are a interference of the free market, right? If we think about basic supply and demand, there's a free market. It's dynamic. Prices go up, then demand goes down, right? And if supply increases, then prices come down. But then when you chuck in a tax incentive, whether the price increases by the exact amount of the tax really depends on the elasticity of the demand curve. Well, getting into like level 3 NCA economics here. But yeah, I think, like, for example, with Tesla, prices were about there, and then when the tax incentive came, I think prices were quite similar. So maybe prices changed because of the strength of the US dollar and the weakness of the NZD. But I think it's been largely the same. In terms of price, they didn't just absorb the entire tax incentive. Maybe a dry? Not too sure what you mean, Luke. Heblamh, it's just like when they up the student allowance, Dunedin landlords up rent by the same amount. Yeah, I'm not too sure about that. I'm not across that amount, but that would, I mean, I don't think that's good necessarily, but like I said, right, the demand for rent would be quite inelastic, especially if there's short supply of accommodation in Dunedin. I don't know what the economics of it is in Dunedin, what it's like there, but if there are 40,000 students in Dunedin, I don't know if it's 40, I'm just making numbers up. So for example, if there's 40,000 students in Dunedin, there's 50,000 houses, then potentially prices, not all of them will go up, right? Some of them will want to attract students because there's more supply than demand. But if you have 30,000 houses and 40,000 students, then landlords can just do whatever they want, right? So it's getting a bit dark now. Sun's going down. I'm just gonna switch on the light again. Here we go. That's better. Cool. Jack's comment here. I don't think unemployment rate in New Zealand will be too much of a problem. I'm just curious how much impact it would have on the NZ economy with rising OCR till mid/late 2023. RB only just stopped printing. Yeah, I think it'll be quite tough. I mean, unemployment rate should definitely go up, right? But yeah, it'll be a very interesting situation. It depends really on how bad things get here in terms of business. But if everyone stops spending, then maybe we'll definitely have unemployment soaring. But yeah, I mean, this is something that is unknowable. So, as Warren Buffett says, if it's unknowable, then don't waste your time. It's important, but it's unknowable. So there's no point today trying to guess where unemployment will go. But yeah, I definitely share the same sentiment in terms of OCR rising. I think it'll be mid-2023. That's just based on like how fast they've increased rates by in the past. So what's the rate now? Like 4.25, I think, the OCR. So the OCR, yeah, 4.25%. And the terminal rate that the Reserve Bank has sort of suggested was 5.5, I believe. So that's a difference of like 1.25 till we get to that terminal rate. 1.25 if the RB just increases it by like 0.5, 0.5, and 0.25. So 3 more rate hikes. Then we'll be there in like April. Right, so the first meeting next year is in February, and then March, and then April. So we'll probably get there by April, maybe mid 2023. But yeah, I definitely do agree with you. Unemployment should stay strong, and I think New Zealand's, because like right now there's not enough. I feel like there's not enough. Well, there's not enough employees around, right? Not enough supply for workforce. So we want people to come in. And for example, with nurses, we definitely do want people to come in. And I think I read some news article, I think it was this week or last week, that they changed the criteria for coming in, for nurses especially. So yeah, we definitely need more people than we have. So I think that will help unemployment stay low for quite a bit. Good. Haplamage here. It's good if you are a Dunedin landlord. Yeah, I mean, it's good when there's a shortage, right? Adam, crazy to see that Ryman today has a lower share price than it did at the very bottom of the COVID crash. What's the share price today? Let's have a look. Wow, so dropped another 3% today. That's gnarly. Yeah, been pretty rough year for Ryman shareholders, down 53%. I mean, it's not much different for Oceania shareholders as well. That's down a lot. 43%, not as bad, but feels pretty bad being a bag holder myself. But yeah, Ryman is definitely the worst performer in the sector. Very rough. Rough. Yeah, it's lower than COVID. Let's have a look. So COVID, it went down to... I felt like it went down to $6. So this chart here is like... Yeah, might not show the daily fluctuations. Might just show it on a week-by-week basis. So I'm sure during COVID, it hit like $6 something. Yeah. And then now it's at $5.63. So you're right. Below COVID lows. Are things worse than what it was during the peak fear of COVID? I don't think so. But the share price seems to think so. Yeah, this is one of the... It was at one point the biggest company in New Zealand, right? So, yeah, very, very gnarly. But, you know, it's historically had quite a huge run-up in some years. Like, 200% gain in 2 years here. That is odd. Right. You have to remember, this is like a company that builds retirement homes. This is not the sort of growth you'd expect to see from a company that builds retirement homes. So it's definitely had years where it's done really well. But in the past 5 years, that is not the case. Tusky here. When households have to refix mortgages is when you're going to see households hurt. My own mortgage payments will be going up. How much will they be going up by as a percentage? That'll be interesting to hear. And how is that impacting your investment property as well? Because I know you have a few investment properties, so how's that going to hurt as well as the lack of interest deductibility? Because the law will change where you can't deduct interest as an expense against your income, which is really weird because if you're running a business, you should be able to deduct interest from your income. But if you buy a house and rent that out, if it's not a new house, then you have to pay taxes on that. I mean, you won't be able to deduct your income against your... you won't be able to deduct your interest against your income. In case if you're watching this and you don't know the tax law. So that's what's happening. It's getting phased in, the lack of interest deductibility over the next few years. So perhaps that might cause rents to go up because at the end of the day, landlords have to make a % yield on their property, and if they have higher costs, they'll just pass it on. Yeah, let's move on. Interesting, maybe if I didn't have so much of an OCA. Yeah, same here. Just feels bad, man. Adam, from a near 9 billion market cap to 3 billion, insane. So, yeah, that's a 66% drop. Yeah, you're right. Really crazy, eh? 67% drop. Yeah. $9 billion. One of the biggest companies in New Zealand. And I believe it might have been the biggest company in New Zealand, like maybe in 2014. Yeah, it was at one point in time. Just didn't know when. Jack, just stack up cash to pick up nice assets throughout the next few years. Yeah, that's what I'm trying to do, mate. That's what I'm trying to do. Looking to buy a house. But yeah, I've been seeing like I have a watch list on Trade Me where I go on Trade Me and look for houses, and when prices for these, like when the asking prices of these properties drop, you get a notification. So one of the houses that I was quite interested in, it dropped by like 44K, and I'm like, oh, that's quite a substantial drop, right? So yeah, it's actually really interesting to see. There's been a lot of drops in prices, and I think sellers will need some time to acclimatize to what the market is right now. Like they just need to reset the expectations, because I guess it's the same with like stocks. We'll sell if it hits a certain price. For a stock that we don't want in the portfolio anymore, we tend to like rationalize, okay, it was at X amount last year. Oceania was at how much? Oceania was at $1.60 at the peak, but last year it was about $1.34, and they raised capital at $1.30 something, right? So a lot of shareholders, if it gets back to $1.30, I think they'll sell. But that's anchoring, right? Because at the end of the day, that's what the share price was a year ago. But right now, it's 76 cents. Things have changed between now and then. So it's not necessarily helpful to say that if it hits $1.34, then I'll sell. Maybe it's good for you. You get a better price, but is it able to get there? I think so, but yeah, I think the road will be long and tough. Yeah. Most of the results for Brokers Pick 2022 will be rough. Yeah, I believe it would. Let's see how that's going, actually. I'll probably do a video when the 2023 picks come about. Yeah, but let's see how the Share Trader top 5 picks are going. Oh, I see Peter has put in the 2023 picks already. So I'll be entering that in soon. Let's have a look at the 2022 picks right now. So this is updated for the week closing on the 16th of December. Let's have a look here. Oh man, 2 people in the green. So what did the top picks? What was the top picks? So Heartland Group, Genesis. I'll zoom in a little bit. See if that works. Yeah, so hopefully you guys see this better. Heartland Group, Genesis, Channel Infrastructure, Spark, and Infratil. Yeah, see, these are like, these 4 are like infrastructure / Gentailer, really stable infrastructure plays. So it does make a lot of sense why this is the top performer. Infrastructure tends to be quite resilient, and they do benefit like from inflation, I guess, because normally some of their services track inflation, have CPI adjustments in them. So yeah, and Heartland Group, I think, is probably down a little bit, but overall up significantly over the past year. Spark has been a really strong performer, so has Infratil. Channel Infrastructure, also a very strong performer after they converted their assets into the channel business. The pipes business, so done really well. And on top of that as well, there's been a recovery in oil. Genesis hasn't been a very good performer, I believe, so that would have dragged the performance down. But overall, 109%, a very good performance. in this year, very tough year. And then 105%. Yeah, A2 Milk also a very strong performer this year after what was a very rough year in the previous year. So, yeah, wow. We have 7 people here, or 6 people here in the green or near break even. And I'm on number 15, so we're not doing too bad. Well, we only lost 7.16%. We only lost 7.16%. Right. So I would take that. I would take that. If I didn't have Oceania, though, I think the performance would be a lot better. Oceania has dropped by half, basically. So by half, that's 50% drop. A 20% allocation, that would be about, that would be 10% of, that's a 10% difference, right? Contribution to performance. Because each one is weighted equally. So if Oceania is down 50% this year, that means this has dragged down my portfolio by 10% overall. So if I didn't have Oceania, this would have been 102%. So yeah, I had Spark, Infratil, and Auckland International Airport. Those 3 infrastructure players have done really well so far. It's just Oceania and Heartland Group. Oceania especially dragging down the portfolio. So if only my performance for the portfolio was this, just down 7.16%, I'd be really happy with that. Unfortunately, my portfolio is different. But yeah, I'll have to think about what I'll pick for 2023. That'll be interesting to see. Yeah, let me know if you're watching this, if you've participated and you don't mind sharing your username. Let us know what your picks were as well. It'll be interesting to see. But yeah, 2022 picks have been rough. So let's take a look at broker picks. Yeah, so I'm number 15, so I would have done better than most of these brokers here. Just underperforming Forsyth Bar. But as you can see, most of these brokers aren't doing too well. Forsyth doing the best. Hobson Wealth, wow, Hobson Wealth down quite big, 34.9%. That's really rough. Yeah, rough year overall for many people. Yeah, A2 Milk has been doing great. Yeah, A2 Milk, one of the best performers so far. I think it would have been induced by some news with new SLT appointments and FDA approval for infant formula. I don't think they're as strong as they used to be pre-COVID either way. They did have that share buyback, so that's good. And FDA approval, yeah, you're right. So that's boosted the share price a little bit. And I guess on top of that, just really low expectations from the investment community around performance. So yeah. My watch list is filled with properties, same boat, man. Yeah. I feel you, bro. But yeah, have you noticed that there's been quite some substantial price drops in the properties around in Auckland here? Tusky, the rental I was under offer for had some issues I found during due diligence. I've pulled pin on the deal and I'm stacking cash for a few months. Yeah, that's probably a wise thing to do, right? I think in this type of market, if you have cash, there's no reason why you should invest in something with so much uncertainty. Because right now there's so much choice available. Not enough liquidity in the market. So whoever has liquidity has the advantage. Adam Fern, the share trader stock picking competition was hilarious. Only 4 people in the green. Yeah, I mean, pretty rough. How many people overall? I think that was over 200. So there's 252 people who participated. Yeah. The worst performer losing more than half of the portfolio. That's really rough. Classic dividend slash infra stocks. Yeah, man, that's what I like, eh? I mean, the Sharesies portfolio, public portfolio that I do here on YouTube, it's a dividend paying portfolio, right? And that's done surprisingly okay. I mean, it's underperformed recently because of some stock price crashes in like Oceania and Collins Foods Limited, the KFC Australian KFC stock. But like overall, if you just look at like overall performance, I think that has fared better than what I thought it would. Well, to be fair, it underperformed, but it didn't underperform that bad. Not a good thing, but I guess some on the bright side, it didn't go too bad. So yeah, classic dividend infrastructure stocks. Perhaps 2023 they'll continue to do well. But yeah, I think 2023, if you pick, I don't know, 2023 will be a hard one, right? Because if you go really risky, if you go risk on and the economy recovers, right? Stock market recovers. Well, I shouldn't say economy recovers. If the stock market recovers, economy could still be bad, but if the stock market recovers, then all your risk on stocks, high beta stocks, will do really well. So at the end of the day, like 1 year sort of picking competition is based a lot on luck. It depends how you see the year, where you see the year going. So yeah, in my mind, I'd probably do similar picks as what I did in 2022. So yeah, instead of Oceania, it'll be Somerset. I don't have any Heartland anymore, so I sold that. I also sold Auckland International Airport. So I have Infratil, NZX portfolio. Let's have a look here. So I have, Infratil, NZX, Somerset, those three. Probably keep Spark, which is in here. Spark was my sort of cash alternative, but turns out Spark was a really strong performer. And we'll pick one more. I'll do some thinking, see what I'll pick for 2023. But yeah, I'll probably be like something on the safer side of things. Haplomage, can I join for 2023? Yeah, you can. You just need to go on. You need to create an account, maybe, I think, with ShareTrader on the forum, and then you can go on the 2023 competition and participate there. You can select your picks. There'll be a Google form, I believe, where you just enter your picks for the year. Properties down here are holding up pretty well. Yeah, I mean, good locations hold up well. Rough locations drop down a lot. I'm looking at the rough locations in Auckland just because that's what I can afford right now. Richard, hey, how you doing? Good to see you here. Thanks for joining in and your question. Hey Josh, what do you think about Third Age Health? I haven't looked into Third Age Health. Are they a retirement village operator? Let's take a look. Third Age Health. Third Age Health. Where is my Third Age Health? What do they do? Dedicated healthcare services for aged care facilities. So Third Age Health is the only dedicated national provider of general practice medical services for. Wow, okay. Yeah, this is just not a business that I'll be interested in owning. Like, I mean, aged care is really challenged right now, so any business related to aged care will also be challenged. If anything I learned this year is that, like, aged care, there's just no ability to raise your income. Like Oceania touts all about, like, you know, providing premium care, being able to charge more, but like at the end of the day, their costs are going up more than their income. That's just facts, right? So yeah, there's not much pricing power, and there shouldn't be any pricing power when you're providing aged care. It's like almost a necessity. So pricing power in aged care, very, very difficult. And any services provided, like services provider in this industry, probably will also have a very tough time. So yeah, I don't know if maybe these aged care facilities use third age health. I don't know who their teams, who uses them. Probably not something that I'll be interested in, to be honest. Like, the reason why retirement village operators are so attractive is because of their development potential. They add value the most through development. So that's what makes a lot of sense to me. So yeah, sorry Richard, can't really help you much on third age health. Going back to Jack, indeed massive drops in property. Think we will see lower prices by mid-2023. Who knows how long the interest rates will be up at 5 to 8% for mortgages. Yeah, like last week we saw how floating mortgage rates were at 8%. Right, absolutely insane. Let's have a look what mortgage rates are right now. Yeah, so still at 8%. Five-year mortgage, ANZ, 7.64%. That's pretty rough. Yeah. I think it'll continue to go down. At the end of the day, I think interest rates go up, prices come down. There might be a little bit of a lag, maybe a 1-year lag at most. But that relationship is definitely true. For the most part. There might be exceptions. Have to qualify that statement. Tusky, I'd be a bit nervous about buying in Auckland, to be fair. I can get 3 houses down here for the price of 1 in Auckland. So you're in Wellington, right, Tusky? Just to reconfirm, I believe it was. But yeah, you're right. Auckland is very overpriced. Adam, third age health has good prospects, but it isn't established enough for me to get involved. I need a company to be proven and establish the Buffett approach. Interesting. So what do you see third age health's prospects to be, Adam? What's a positive catalyst for them? This is for the Share Comp 2023. Haplomage. Night all. I'll watch the video in the morning. Oh, you're in Ashburton. That's right. Okay. Well, yeah. Thanks for joining in, Tusky. Really appreciate it. Know you have an early morning tomorrow. But yeah. We'll thanks for joining in. And I'll see you next year, I guess. Have a Merry Christmas and a Happy New Year. Thanks for joining in. Really appreciate it. Jack, I always tell myself I'd buy when prices are low but interest rates are high rather than vice versa because you can always refinance the interest rates. What do you think? I think very similarly as you, Jack. Interest rates being high is not necessarily like a bad thing, right? Because it means house prices should come down. If they don't come down, then that is a bad thing. But if they do come down, then that is a good thing. Because you're basically buying at a lower price. And at the end of the day, you want to buy low, sell high, right? So same goes with houses. You want to buy low, as low as you can, right? Because say if interest rates are high, your repayments are high, your interest costs are high, but house price is low, then you're borrowing less. And you always have that upside risk. If interest rates fall, then theoretically your house prices should go up as well. Whereas if you're buying high but low interest rates, then you don't have that upside when interest rates go down, right? Because interest rates are already low. But when interest rates go up, then you lose that capital appreciation. So I agree with you. It does make a lot of sense to buy. I prefer buying when interest rates are high and house prices are low than the other way around. Tusky, I'm in the Ashburton district. Right, okay. Let's see where Ashburton is on the map. Oh, so that is... Oh, yeah. In case you don't know your New Zealand geography, just like me, Ashburton is north, south, east, west? Southwest of Christchurch, I guess. Yeah. Interesting. So Ashburton has a township population of 20,500. That's cool. I have to visit one day. Haven't been to the South Island in a while. So, yeah, South Island is quite nice. Just a bit cold for me. I mean, I grew up in Malaysia, so I'm used to that. I'm used to that 33-degree all year round, and the humidity, which is quite similar to what we're having here in Auckland. It's very humid. Jack, but so many people were keen AF to buy when 2% interest rates at record high prices. Yikes. I guess that's also like part of the FOMO aspect, right? There's a lot of FOMO involved. When people were jumping in at the peak a year ago, 2 years ago. I think, yeah, there's definitely that FOMO aspect to it. But yeah, we'll see what happens. Hopefully prices continue to drop. Well, for me at least, but if you're a homeowner, definitely you'll want that to go up. Pit League, how's your portfolio doing? Mine's doing absolutely rubbish. I'm officially in the red overall, first time in 2 years. Yeah, same here, I think. Like, the public portfolio is down, negative 6% now. So this is since first purchase, right? And the other time it was down was during COVID. So right now the portfolio is also down. I mean, it's still slightly above where COVID was. But yeah, not doing too hot right now. And this past month has been terrible for the portfolio because Collins Foods just absolutely crashed and burned. That's not done too well. It's suffering a lot from high inflation costs, right? A lot of their costs have gone up. And Oceania, also a very bad performer. Somerset, not too bad relative to Oceania. But yeah, I made a net investment in the retirement village operators, and this year was not a good year for them. So yeah, overall portfolio is down. But yeah, if house prices recover, then I think the portfolio would do just fine. But because I don't own a home, I guess I see owning these retirement village operators, especially Somerset, as a proxy or as an alternative to buying real estate. So that's one way to look at that. I'm down 0.08%. That's not bad. Not bad at all. Till 7 figures. Yikes, the ASX. The ASX has done relatively well overall. Just a few names in here that haven't been too good. Collins especially. And the other mistake that I made, I believe it was this year, was Kogan. Yeah. Or maybe that was last year. I think Kogan was towards the end of last year, and then I sold early this year. So Kogan was also quite a bad performer for the portfolio. If I click here, open positions, yeah, showing open and closed positions, you can see how the portfolio has done overall. All right, so overall, I'm actually not doing too badly. Overall, if you include like everything, not just open positions, including closed positions, the profit that I've taken off from them, the portfolio has done negative 0.54%. So just underperforming the NZX 50. And yeah, Kogan was down. I sold that at a 61% loss. So perhaps if I didn't have this Kogan investment, the portfolio would have outperformed. But that's normally the case. You can have a bunch of stocks that have outperformed significantly, like over here, and then just a few, and that will drag down your performance significantly. But to be fair, I did have a lot invested in Oceania, so I was too overconfident in that one. But that goes to show, like, downside protection is definitely more important than upside gain. Like, I guess that's how like Warren Buffett and Charlie Munger have been so successful. It's because they don't take stupid risks. They don't invest in Kogan or Oceania. They invest in very stable, no-brainer stocks. Yeah. So that's a lesson for me this year, I think. Don't bet too hard on one name, and always protect the downside. Downside mitigation is more important than upside gain. Definitely the lesson here. Adam, haven't looked too much into Third Age, but their private hospital element caught my eye. As our health system is increasing Americanized, but haven't given it too much thought. Okay, so they also have a private hospital element. In what way is our health system increasingly Americanized? I'm a bit ignorant about our private public health system. Yeah. So do you mean like more and more people are going to private healthcare? Which is what I assume that's what American health system is like. So I'm not too familiar with the American health system either. So yeah, it'll be interesting to hear your thoughts on that, Adam. My portfolio have been saved by having 50% of my portfolio in integrated energy companies and natural gas pipelines for the last 2 years. High USD and fat dividends plus Ukraine, all NZ investments performing poorly. Well, that's good. Yeah. Yeah. Gas pipelines, like for example, Channel Infrastructure has done really well, right? So. High US dollar, yeah, I mean that would be perfect in this climate. High US dollar and fat dividends. New Zealand investments performing poorly. Hey, we're all in that same boat. I mean, look at the share trader competition, right? That's all you need to see. Pitlig, I still do not understand why you decided to invest in Kogan. What was your thesis? Yeah, so at that time, Kogan was beaten down already. It dropped like from $25 to $10, and we were still going in and out of lockdowns. So my thesis was that, I mean, we've already gone out of the first lockdown in Australia. I don't know why I say we, but because I live in New Zealand, but in Australia they went out of the lockdowns and then they came back in. So I was like, okay, Kogan should benefit from this theoretically when people go back inside their homes. And that's what Kogan was also thinking, and they stockpiled on inventory. They bought way too much, more than they needed to. And then, yeah, it turned out sour. It turned out that my thesis was wrong. So in hindsight, I guess, like, it was a 50-50, to be honest. It wasn't, like, asymmetric in terms of risk. So it turned out, well, perhaps it wasn't 50-50. Maybe I was only, like, 20% would have been correct. I would have been correct, but maybe it was 80 or 90%. But either way, like the downside was more than the upside. We can clearly see, and Kogan is as the Buffett approach, as Adam mentioned earlier, is relatively new and unproven. It looks like stocks that have, like A2 Milk as well, very similar. They've done really well, and then stock price crashed and expectations reset. So perhaps Kogan is in that position right now, but at that time that was my thesis, at least. But yeah, I was wrong on that. So lost money, 61% on that. But it was a relatively small position. It was like $1,000 I think I put in for the public portfolio, so lost about $600. So overall, not too bad, but still hurt the portfolio performance definitely. Yeah. Otherwise, would be up positive 1% right now. Hashtag risk management. Yeah, you're right, David. It is really all about risk management at the end of the day. Yeah, so I guess sponsors for today's video, or I mean, if you want to support the channel, check out ShareSite. ShareSite is what I use to track all the performance of the stocks in the public and also in my private portfolio. So you can check them out using the link below. You get 4 months off when you sign up for 1 year. And yeah, it's a really useful tool. You don't need to pay to use it. You can use it for free. So I'll just put in my affiliate link over there. So if you check them out, if you want to sign up, just use that link as well. So definitely recommend it. It helps you sort out your taxes so easily. Adam, the company that is attracting my interest the most on the NZX is FBU, especially if they can keep a dividend of 40 cents or higher. Historically, those who bought at this price range have been well rewarded. I guess, yeah, FBU has been paying quite good dividends lately, and the share price has come down quite a lot. So, similar story with the Australian version of FBU. So let's have a look here. Down 3.5% today. Oh, wow. Wow, it's going back to the COVID lows. So it went up 21%. Wait, that's not even COVID lows. What am I on about? Sorry. It's getting late, as you can see. COVID lows was $3 in 2028. Yeah, so it's still up 42%. Wow. Up 100%. I was like, no way that's only the COVID lows. But it does look like a COVID chart to me. Oh, man. But yeah, down 36%. Yeah, this stock never has been a compounder. It's lost a lot of shareholder value. Interesting, eh? So 40 cents a share, yeah, that's about what? 9%? Yeah. 8 point something percent, 8.55%. Not bad at all, Adam. But yeah, the Australian version has also come down a lot. James Hardie. They have more of a American exposure though. So yeah, past year James Hardie has dropped more, about 50%. So yeah. But I wonder what the impact of a slowing housing market will be, because we also know that the number of consents have dropped. So people will be building less houses, and that's what I've been hearing in the industry, right? Because I work at a property developer company, so based on people that I'm talking to, yeah, they're seeing a lot of pain next year. So perhaps that's the market pricing in a downturn in this industry. Hard to tell. Like I said, it's important, but it's unknowable until after the fact. So yeah, something to look at. But yeah, I think we'll call it a night, and we'll call it a year as well. This will be the last live stream for the year. Thank you all for joining in as usual. But yeah, so we'll resume the live streams maybe sometime next year. I won't be streaming next week. I'll be busy. Have dinners with like family and stuff for Christmas. What am I doing for Christmas? Having dinners with family, and then we'll be going away as well for a bit. So yeah, won't be live streaming next Tuesday, but we'll be back sometime next year. Maybe not the first week of Jan, still need a break, but perhaps mid-Jan we'll start it up again. That'll be on the 10th, maybe 10th of December. But yeah, really appreciate all of you guys joining in for the live streams. I know live streams are a new thing for me towards the end of the year. I only started doing it, so really appreciate all of you guys who come in. Put in questions, hit the likes, you know. Right now we have 10 likes. Can we get 12 likes? Just make it a really low target. Just hit like if you're here and if you haven't hit like already. But yeah, thanks all for joining in. I really appreciate the support. 2022 has been a very busy year for me. I haven't been posting as much as I'd like to. But hopefully 2023 will see better markets, better stock market movements, and hopefully I can also post more. So really appreciate all of you guys. If you enjoyed it, be sure to hit like, share it, tell it to some family member when you're at Christmas. But yeah, stay safe. I just drive safe. Roads are dangerous, so drive safe during this Christmas, and hopefully I will see all of you guys next year for more stock market content and discussions. Really glad to have all the questions as well. But yeah, may 2023 have less red. Yeah, I definitely hope so, because the portfolio is bleeding right now, and I know a lot of you guys are feeling the same way as well. Pitlig, thanks so much for the streams. It's been good getting to know you through these streams. Yeah, I think the main motivation for me for these streams were to get to know people on the streams and like on the channel, because making videos, they take a lot of time, maybe 12 hours of time to actually make a video. I post it and I reply to some comments, and that's it, right? There's no interaction there. So that's the reason for why I actually wanted to do these live streams. But I still want to create content as well. So next year we'll definitely spend more time on that. So yeah, thanks Pitlig for joining in. Really appreciate that. Both in the stock market and in government. Yeah, let's hope so. Jack, hopefully we don't fall in 2023. I really appreciate that, man. I think 2023 will be a very interesting year. And thanks, by the way, for the $5 donation. You're the first donor, first and only donor to the live stream. Really appreciate that, Jack. You didn't have to. But yeah, we'll catch up sometime, mate. David, Merry Christmas. Peace. Thanks, man. Thanks for joining in, David. Merry Christmas and have a Happy New Year. All right. Well, we'll call it a night. Thank you guys all for joining. We'll see you guys next year. Stay safe. Until next time, take care.